Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. If you'd let me know whether you can hear me okay and whether you can see the chart and the risk disclaimer okay as well, that'd be great, then we can get going. Right, so it looks like everything's okay, so let's just have a quick read of the risk disclaimer. Just remind you all that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all trade decisions are your own sole responsibility. In other words, there will be losing trades no matter what approach you take, but the trick is keeping those losses small. Right, let's come down here. Right, where should we start? Well, I'd like to start with having a look at the USE minis. Perhaps we'll have a look at what unfolded on Friday. Just bear with me a second, I'm just about to cough, so I'm just going to just muted myself there, sorry about that. Right, so I want to go back and have a look at Friday because, as you guys know, you've all been with us for a while. MT Predictor is not a black box. We don't just blindly take all our MT Predictor trade setups blindly, perhaps in the direction of the MTP trend, as if it's a 100% black box system. We don't do that because we understand the basic markets are random half the time. We've seen that quite a lot over the last couple of weeks when there's basically no clear discernible pattern. And this is what confuses a lot of amateur traders as they try to do analysis when there's no clear pattern. And to be honest, it's just quite fruitless when you try and do that because no clear pattern, you can't understand what's going on. So what do? Well, we look to try and discern when the market pattern's clear, and we do that by looking to the higher time frame. So if on a 3-minute chart, you go out to the 15-minute chart. If you want to say a daily chart, you'd go out to the weekly chart. If you want to say an hourly chart on perhaps Forex, you'd go out to the 4-hourly. So you're basically looking at a time frame between 3 and 5 time frames higher. So how do we do this? Well, I want to start by looking at Friday. This is a 15-minute chart. This is the regular trading hours, by the way. So it's 9:30 to 16:15 New York time, what we call the day session. So I just want to go back to a bit earlier in the day on Friday. So this is the situation we had on the NQ. You can see we had a previous pivot high here. So if the market is looking to go up, we look to place a DP from the previous high or low, in other words, the previous high. So we right mouse click, we do decision point. This gives us an area of resistance. If it's obviously going down, it gives you an area of support. We'll look at that in a bit in a minute. I'm going to take the maximum off just from the moment, so I'm going to just look at the typical. Can you see how that's on the chart in advance? This is what we do everything with MT Predictor. We're looking to work in advance. We're not looking to just look back in hindsight. We're looking to look in advance to anticipate what's going to happen. Let's move forward. Can you see now how the market went up into that level and then it made a reversal? In other words, it was starting to do what we anticipate. If I move forward a bit, the reversal actually came in a bar later, but it started to come in. So this is what we're looking to do. We're looking to see whether the market does indeed do what we anticipate it was going to do. In other words, is the market pattern becoming clear? So this is what we have on the higher time frame chart. I'm just going to turn training mode off. I'm now going to go down to the 3-minute chart and just have a look at what it was looking like on the 3-minute chart. This is what we had on the 3-minute chart. So first and foremost, I mean, there was a TS4 buy set up there a bit earlier in the day that would have got you a nice trade going up into that high there. If I place that on, you see that that would have been a trade up there, and that was in the direction as the market going up. But that wasn't what I particularly really wanted to look at, because this is what I wanted to show you is, can you see how the market reversed at the higher time frame resistance? This is what we're looking for. We're looking for the market to do what we anticipate. So if the market is now reversing off this high, can you see how the market then started to decline? Our MTP turned red. Do you see how suddenly the pattern started to become clearer? This is what we're looking to do, is we're only looking to look for markets or at a time when the market pattern is becoming clear. So of course, if now we deem that is made a reversal at this resistance, our MTP trend is red, indicating a downtrend. The two are telling us the same thing. We're now then looking for potential short trades. A bit later on, we can see that there is indeed a TS1 sell setup unfolds there. So therefore, this would be a good trade to take. You got to take it into a short trade. The market did start to go with you, albeit very choppily, still started to go with you, got down to this level before it started to reverse back up again. Now, it hadn't quite hit its target. So whether you'd want to bring your stop to break even at that level or not would have been up to you. I mean, what I want to do as well is, do you remember we look for the DP for support at the minor wave B? Now, of course, if you have a TS1 set up, the Elliott wave patterns going up into that, you see that in here, A, B, C are only on the minor swing, and you can't do a DP off a minor swing. It has to be off an intermediate. So you can't actually do the DP off a 3-minute chart. But I'll go down to a 2-minute in a second. But let's take the worst case scenario. Let's say you didn't bring your stop to break even and you left it where it was. You would have been stopped out there. Losses can and will and do unfold. Why is it important not to bring your stop too close? Because, well, here we had another trade set up. MTP trend is red. Initial decline down. Here's an ABC pattern coming up here. If I do Elliott waves, here's our ABC pattern. Can anyone tell me why we like this particular trade setup and why it's a particular favorite of mine coming in here? Why do we like this particular trade setup? I mean, this first one, TS1, was perfectly valid, but why do we particularly like this trade setup here? Come on, guys, you should all know this. The reason we like it is because here's our ABC correction. What's the most common place that an ABC correction unfolds? Well, if I right mouse click here and do Elliott wave major, it's off a wave 2. Okay. I know this says 1 or A or 2 or B, but because we're coming off a major high here, what we do is this is the start of our sequence. Perhaps I'll back up a little bit. The reason I developed my unique isolation approach to Elliott wave was because over the last 33 years, I found that Elliott wave breaks down so often, and it gets so many people frustrated about Elliott wave patterns. But the trick I found is to only do Elliott wave when the picture's clear, exactly the same as what I said right at the beginning of the webinar. So effectively what I decided to do was, let's start the Elliott wave sequence, not just have it continuous and going through continuously, because that will always break down, is you start it when the market pattern becomes clear. In other words, can you see here, I've got the cursor on. At this point, the market is making a reversal off our higher time frame resistance. Therefore, we draw a line in the sand here and we say, right, I'm now going to start my Elliott wave count here. So from here, the initial move down is a wave 1 off a major high. We have an A, B, C correction. That correction, if I place the major swings on, there it is, you see that? That correction there unfolds as an A, B, C. Sorry about that. Just need to use the training mode again. I just refreshed the chart and came out of the training mode. Sorry about that. So this is what we're looking for. This initial correction is the wave 2. The most common place that you find an ABC correction, A, B, C, is in a wave 2. So this is what we're looking for. Why do we really, really like the end of a wave 2? Well, we really, really like the end of a wave 2 because after a wave 2, you then tend to get a wave 3. So if I clear this all off now, and now I place the analysis on here, what we're looking to do is we're then looking to anticipate that then there's going to be a wave 3 swing off this wave 2 correction. Why do we like wave 3? Because as I've just said, a wave 3 is typically the longest and strongest in a 5-wave sequence, a completed 5-wave sequence, therefore represents the largest profit potential, not just in dollars, but in risk reward units compared to the initial risk. So this is what we used to call the Holy Grail all those years ago, but we renamed to W3 or wave 3 trade setup because people didn't like the name of the Holy Grail. So this is why it's one of my favorite trade setups, because it has the largest profit potential in relation to the smallest initial risk. And if I turn training mode off, you can see that's indeed what it did. Just turn those major pivots off now. Yeah, you're right, PH. As he said about the Monty Python movies, yep. I remember those. So as you can see, excuse me, as you can see, the market did indeed do that. It went right the way down to the typical wave 3 WPT, where the profit of plus 14R was available. If you look down to the MTP trend, when it hit that point, i.e. here, it had gone through our MTP, our risk reward, sorry, our strength bands. You see that, those bands there, those horizontal bands, there are strength bands. If it goes through that, when it reaches the target, it anticipates that the move's strong, and therefore you can look to run the trade a little bit further. Normally with our ATR stops, which are red and blue dots, so you probably would have come out of at close. If you had have done, well, that would have been a absolutely massive 20-hour trade. If you hadn't have done, then a 14-hour profit would have been very, very nice indeed. But you see how this was all set up by having this 15-minute resistance on your chart in advance. So this is the point at which the pattern starts to become clear. There is one very important point to stress here. If I go back to this point, just look what happened here. The market had gone with you, but look at that, it went right back to break even before then starting to go straight down to 14R. This is why it's so important not to bring your stop to break even too quickly. I said this last week, didn't I? Is that about a case of not bringing your stop to break even too quickly. What I normally suggest on intraday trades is you wait till you're at the DP from the prior wave B. So if I right mouse click here, I do DP. Do you see how there's the DP level? It hadn't reached it yet. So you wait till it gets to that level, i.e. there, before you bring it to your stop to break even. So this is why it's very important. So I just want to go quickly back and show you on that TS1 trade setup. I was saying about you can't find the DP on when it's a TS1 because of the minor swings. If you go down to the shorter time frame, still can't see it. Let's go down to an even shorter time frame. Right, there we are. There's the same. Do you see that? There's the swing. So this TS3 on the 1 minute would have been the TS1 on the 3 minute. This would be the ABC. Do you see that? If I do the ABC, there's the A, B, C. So we do the DP from the wave B. So we do it from here. The typical. So do you see how the market did indeed go down to that DP before it started to rally back again? So now if I go back to the 2 minute chart, where are we? That way, isn't it? Sorry, the 3 minute chart, I mean. Going mad here, aren't I? So if I go back to the 3 minute chart, do you all see how on that TS1 sell, it had reached the DP from what would have been the minor wave B? Do you see that now? Yep. Do you see that? So therefore, on this TS1 sell here to start with, even though it hadn't reached this target, you could have brought your stop to at least break even. So that would have avoided that one. So that's a little thing a little tip to get you there. Yeah, Lynn, it's amazing how many times these DPs do work, like this. It's amazing. So that's why it's important not to bring your stop to break even too quickly. I cannot say that enough, is that if you bring your stop to break even too quickly, like here on this one, you will miss out on big profits. Yeah, Lynn, it's quite a good example of that, isn't it? So did any of you catch that trade setup yesterday? So on Friday. Hopefully you did. Right. Let's have a little look about something a bit more also brilliant on this. Let's go back to the 15-minute chart. Right. This pattern going up here, even though it's at a DP high, if I right mouse click, I do Elliott wave intermediate, can you see how this was also a 5-wave sequence? 1, 2, 3, 4, 5. With the high right at the minimum wave 5 WPT. What do we know about a 5-wave sequence? What normally happens after a completed 5-wave sequence? For you guys who are new, don't worry about this. Some of the guys who've been in here for a while should know this, but this is a very good example. Here we have a completed 5-wave sequence. First thing we normally anticipate is that the market will go to the DP from the prior wave 4. Okay, so there's the prior wave 4. Do you notice how also this is the last swing into the high? So do you remember the webinar we did a couple of weeks ago where we look about choosing which pivot to take to do our DPs from? If the market is retracing back off a previous high or low, the first place is the last swing into the high or low. So that's the last swing into the high. So we right mouse click, do decision point. This would be the first area of potential support. Now, we've already seen that it was a very weak day on Friday. It went through that. So if the market goes through the DP from the previous wave 4, i.e. which it did, I mean, this is the first area of support, where does it then next tend to go to? And where do we then next tend to look for support in this case? Obviously, if this is upside down and going the other way around, we'll be looking for resistance. But if the DP, this one here, we're not using the maximum, just the typical, if this DP here from the prior wave 4 is breached, where do we then tend to look for support? Come on, guys, you should all know this because I've been over this quite a few times over the years. It then looks to retrace the entire prior 5-wave sequence. So we don't go back to this one. No, we don't use that pivot. We go right back to the start of the sequence. So this is a nice 5-wave sequence because it starts at a pretty major pivot. So we go right back to here. We then place the DP on here. And we say this is the area of where we are potentially looking for support. Once that was breached. And just look what happened yesterday. Bang. Look where the low of the day was yesterday, right at that DP. So, again, so yesterday you should have anticipated that you'll be getting support on the NQ at that level there. So I hope you all saw that, because then when you go down to the 3-minute chart yesterday, there's your support. Our MTP trend turned blue as the market started to rally back up off that level. Therefore, you wouldn't be looking at sells, you'd be looking at for buy setups. So it fitted in nicely with how the market unfolded yesterday as well. So remember, this is what we're looking to do, is we're looking to try and trade when the picture becomes clear. We're not looking to try and forecast all the time and all the markets. That's why I suggest if you follow the E-minis, you follow the ES and the NQ and the YM, because yesterday the YM was, well, quite confusing, wasn't it? You had a red MTP trend and buy setups. You had a, same here, you had buy setups coming in with a red MTP trend. And actually, if you had a look at this on the 15-minute chart, you had a resistance coming in there off that last high. So it's really confusing on the NQ, on the ES yesterday, because look, there's the high. It looked like it was going down. We had buy setups. It didn't really work out as anticipated. So that's why that you have to look at all three of them to see which one is working out as you anticipate. By the way, just to blow you away a little bit more, if I jump back a bit in time to here somewhere, the market's rallying up here. Where do we anticipate that market rally is going to peter out? Where do we anticipate the next resistance level is going to be as it's going up on this 3-minute chart? What's this swing here? Do you see this swing? This swing here is the last swing into the low, isn't it? This is why I've gone over this so many times before. There's the pivot low. This is the last swing into the low. So this is the pivot that we place our DP off when the market is making a correction back off an important pivot. So it's the last swing into a higher low. We use the typical, not the maximum in this particular case, because that's the one we use typically, because it's the typical, because it's the one where they unfold mostly. So do you see, as it is rallying back up here, this was the area where you anticipate there's going to be a reversal or there's going to be a resistance. So therefore, this TS4 is also a good one to take because our MTP trend is blue, coming off 15-minute support. We also haven't got at that level. And I just thought it was amazing the way if I take that off, look where the market went up to before it then started to retrace back a bit later in the afternoon there. So, these levels are so important to be on your chart in advance because they give you areas to anticipate in advance of where you think these support and resistance levels are going to be. They're leading indicators. If you're using NinjaTrader, exactly the same. You do, exactly the same. There's your DP on there, the 15-minute. Come down to the 3-minute. Here's your DP off that pivot. It's exactly the same. So this TS4 would be a good trade setup. Let's right mouse click over the blue buy bar there. Analyze trade setup. There's your trade setup into the first target there. You might say, well, actually, I don't want to take that one. I want to perhaps grab it and go up to the next DP up there because you've already had that on the chart just to try and squeeze out a bit more profit if you wish. But you see how the whole idea of MT Predictor is we're only looking to do this kind of analysis when the market pattern and the picture's clear. In other words, when we place our DP levels out on our chart in advance and when the market makes reversals at those anticipated levels. If it's not doing that, which it won't do that literally half the time or slightly more. The market pattern will be unclear. This is why I keep stressing it's so important to trade a lot less than our brokers would like us to, a lot less than we're used to doing, but only trade when the picture's clear. This is the whole crux of what we do at MT Predictor. So the NQ has had quite a good day over the last couple of days. So I'm glad that quite a few of you managed to catch that as well. So are there any questions on that? Perhaps on the 5-wave sequence, because you probably haven't seen me say that for a while, but that's quite an interesting one to remember. Is when you get a completed 5-wave pattern like that, the first area of support and resistance is the DP from the prior wave 4. If it goes through that, then you tend to look for support and resistance off the completed prior sequence. So the completed prior sequence, i.e. down here. So that worked out rather nicely. So the NQ was doing quite well there yesterday. Any more questions on what I've said so far? Because I'll then have a quick look at the large degree position of the US markets, and then perhaps we'll go and have a look at some other markets. I've been asked about, I probably won't look at natural gas, I'll probably look at crude. Right, let's go to the ES. Well, the ES, we're basically still in this sort of sideways movement here, where we're still at that DP there on when the COVID drug announcement came in. So we're still basically making inside bars from that wide range bar there, sort of chopping sideways. Not really made any decision what to do on the ES there. The YM, similar kind of thing. We're sort of chopping sideways, but approaching up at the top of that DP level. The NQ is the most interesting one because here's a potential ABC pattern into a tier 3 cell, even though our MTP trend is blue. But what is very interesting to me is we're basically moving sideways here with quite narrow range bars. Do you see this? These are quite narrow range bars moving sideways. Now, what tends to happen after a market's been consolidating like this is like a spring. This is like a spring winding up, getting tighter and tighter and tighter. What happens is when you let go of a spring, is it boing, it snaps out and then starts to get unwind. So what is very likely to happen here is that this is very likely to unwind, and we're then very likely to get a pretty big move coming off this with some big days coming in. Now, of course, this is now leading up to the holiday. Thanksgiving for you guys in the US this Thursday, isn't it? So I hope you all have a good Thanksgiving meal. So markets tend to rally into holidays and then have their moves just after. Now, whether that's going to happen now, we've basically only got 1 and a bit days, haven't we, before the holiday on Thursday. So it'd be interesting to see whether we do get a bit more of a rally, then it dumps down or goes, makes a break just after the holidays. We'll see what that happens there. Or you never know, we might even get a big move today or tomorrow. But you see, the point I'm trying to tell you is that when you get something coiling up like this with very narrow range days, don't be at all surprised that suddenly you're going to get a big movement. I mean, even that you get it here, like here was a few narrow range days, then that one was quite a big move. There it chopped sideways and then it moved out of it. So just be aware of that, particularly on the NQ. Not so much with the YM because that's actually, making a move. So it'll be interesting to see what these markets do over the next few days, whether we do get a little spike up to new highs on the YM and what happens on the NQ in particular with this sort of coiling up as it goes sideways. Let's have a quick look at crude. Well, crude has now gone up into this DP we had here off this prior level here. So where did it come off from? Well, if I take the DP off this previous low, it actually came into the maximum DP. This is where the maximum comes in, is that the most often, or the area where we most often get resistance, support and resistance is our typical DP, which is this one. But if this one is exceeded, then the next place to look for support and resistance is our maximum DP. So as you can see, that caught the low nicely. So this is a good example here of where we went through the typical, but we reversed at the maximum. I don't tend to use the maximum that often, but if it goes through the typical, like this one, then you very often see a reversal at the maximum. So that's very handy to use if we go through the typical area. So that's where we are at the moment. If we go through this, the next area would be off the next major high here. So that comes into this particular level around the 45 area. So we'll have to see what crude actually does. Gold seems to be declining down. It's declining down off the DP from there, you see, Where would the next support levels be? Well, if we go back to that last pivot low, we right mouse click decision point. We've now gone through the typical. We're now at the maximum. So this would be the last area where we'd anticipate for support on gold. So it should come in today or tomorrow. If not, then we could get a continued decline down to anywhere into these levels here. You know, the decline could carry on sharply down. So an interesting situation on gold now at a potential important support zone. Right, so any other questions coming in? I don't tend to look at natural gas. Myself, I don't even know what the code is for natural gas. Is that the one we're looking at for natural gas? I don't tend to follow natural gas myself. No, that's not. That's the one we want, natural gas Globex. Sorry, wrong one I'm looking at. Let's go out to Jan 2021. Amazing how this year's going, isn't it? Yeah, so this would be an interesting one because we have a VS buy set up here. So would this be valid? Well, let's go out to the weekly chart. There's the DP off the last swing to the high. Right mouse click, do DP. See, that's we're at our DP support. So if we now come down to a daily chart, that looks like it's a valid VS buy setup. There we go. So a valid VS buy setup on the daily chart at weekly support. Now, whether natural gas is going to rally up to here, I have no idea at all. All I know is that at this particular point in time, that looked like a potential valid buy setup on the daily with weekly support. So thanks for sharing that with me. I wonder if there are any setups on a slightly shorter time frame chart. No, it doesn't look like there are. But I'd be interested to see whether that does actually continue on rallying. Right, any other questions in the last few minutes before we wrap up? Just remember that it is a holiday in the US this Thursday. Yeah, PH, that was a really good, we looked at the Jan soybeans last week, didn't we? So that was an amazing amazing rally up on the soybeans there. So very well done for catching that. We looked at that last week. So I just want to say happy Thanksgiving to all the Americans there and anyone else who's celebrating a Thanksgiving meal. So I normally say with friends and family, but this year with the COVID restrictions, I think a lot of people are going to be celebrating via Zoom and actually staying at home. So it's probably very sensible to keep the masks on and keep keep separating, keep away from people this this Thanksgiving. But hopefully it is going to be a time when you can celebrate, either with your own family or if you've got extended family, celebrate virtually via Zoom and keep in contact that way. That's probably the best way to stay safe. But it is going to be very interesting from the market's perspective, I think, on what's going to happen, particularly through this week as we go into Thanksgiving and next week as we come out of Thanksgiving. Particularly now the president elections seem to have been sorted in the US. I see the transition period has started with Biden at the moment, so that seems to be being sorted out. So there should be less uncertainty in the market. So they should be able to start to make its own mind up on where it wants to go next. So I think just be very careful over the next week because lots of traders will be having some of the time off for this week over Thanksgiving, but particularly with the markets coiling up like this, we could have a potential for a bit of a big move. So, just be very aware of that, people, and just stay very careful on that. But anyway, I'd like to just wish everyone a happy Thanksgiving for however you're celebrating it and whoever you're being with. And yeah, I hope you have a good trading week and just stay safe out there, guys. That's the main thing. Stay safe in the markets and with your health as well. So have a good trading week, everybody. Have a good celebrating week, and we'll be back to do it all again next week. And hopefully you've enjoyed today's webinar. I hope it's been a good session, particularly what we were looking at on the NQ, on the completed 5-wave sequence and what we were doing on that, and then how we were going down to look at the shorter time frame charts from Friday, how they were unfolding, and then how that extended into yesterday as well. So hopefully that's some good analysis there, and hopefully you've enjoyed it. Yeah, PH, it will be recorded and will be available in the customer section of the website a bit later on today. So have a good trading week, everybody, and we'll do it all again next Tuesday.